All right, everybody, this is Dave Savage, and this is a special video. Usually we do not put our webinars for the industry that we do for the executive level in our YouTube channel, but this is special. It's important. It's a special time in this market right now with the NAR settlement taking place. Realtors need us more than ever. This week, the MBA came out showing the lack of profitability in the fourth quarter, and so there's a profitability crisis. And we truly believe that lenders could be profitable. Every lender could be profitable right now. But the key to that is you need incremental loans out of your database, and you need loans now. Like when you look at the amount of loans that lenders are losing in their entire database, and you look at the amount of loans they're losing from credit report to funding, there's just a tremendous amount of waste. And this is a video all about, the conversation all about how you can get more incremental loans now from your database and how you can do it at scale. So check it out. This is the big news in housing. Whether you're in real estate, whether you're in mortgage, the NAR lawsuit is, I believe, a seismic change in how realtors will do business. Owen, what are some of your thoughts on this big news?
Dave, as you and I were just talking about, I'm actually fresh back from the Mortgage Bankers Association National Advocacy Conference in Washington, D.C., just wrapped up yesterday, where this was a huge topic of conversation. And, just a couple of thoughts I have is, number one, this is not yet a finalized settlement. So every prognosticator that is out there saying, well, this is going to happen, well, this is going to happen. I'm a lawyer by training, so I just would say, let's let the judge sign off on the settlement first, because it's not a done deal until it's a done deal. And the second thing I would say is there's a lot more that we don't know than that we know. Clearly, the National Association of Realtors, which controls about 85% of all the multi-lists in the country, has conceded that they can no longer have those multi-list systems have a button where the listing agent has to publish what the flat fee that they're willing to pay the buyer's agent, and that's going to be out. But we don't know exactly what workarounds are out there. I'm sure KP can opine on this as well. We close a lot of loans every single month where the borrower doesn't have a whole bunch of money to bring to the closing table extra. So the idea that the borrower is going to immediately have to bring in 2% or 3% or something like that, I'm not sure about that. And because they don't have a whole lot of extra money, that will probably fluctuate with markets, right? In some markets, the borrowers are richer. In a market like now, where there's a lot of pressure on affordability, they're really not. So that'll be interesting to see. But I think the thing that strikes me is it's definitely an opportunity for disruption. There's definitely going to be opportunity there, but there's more that we don't know than that we know.
Yeah, no, I couldn't agree more. A couple things I do believe is that the mortgage industry for a long time has been, the advice revolution. Loan officers need to be great advisors. And I do think buyers agents need to, they need to start having a presentation. They need to negotiate their comp, and they need to get a contract signed. So I think it's being an advisor. And then I also think databases, the topic at hand, they were valuable last Monday. Just hearing where the settlement's going, even though it's not finalized, your database is going to be even more valuable, and your database practices. Hey, Pete, welcome, my brother.
Hey, I've been on for 10 minutes, but it wouldn't let me on from calling in. So you just got to use my speakerphone, and I hope it works.
Yeah, well, you sound great and you look great. And what are some of your high level thoughts on this NAR settlement and the news that's hit our industry?
Well, you're all going to get my thoughts early, because I'm putting this on my YouTube, on my LinkedIn video tonight, and so it will post later tonight. But yeah, Owen, you actually just gave me an original thought idea. I mean, I agree. I mean, down payment has always been the issue as the biggest single hurdle to home ownership. That didn't change overnight with this case. So who's going to negotiate on behalf of first-time homebuyers? I mean, it's not like because this case, now they have this new advocate in their corner. The advocate is still the buy-side agent. And so, you know, that value proposition of a buy-side agent did not change overnight. Now, the borrowers may think they have more room to negotiate, but who's going to do that for them? Like, who, you know, because they see an article, they're going to go, hey man, I saw this article about this lawsuit. Like, I only have to pay you $500, right? Yeah, no, sorry. My time is worth X, and here's why it's worth X, right? I have the ability to get you landed in a contract. I know these listing agents. I'm the boots on the ground that's been in this community for 20 years. So I have a relationship with Owen or KP's team, right? So I can help you on the lending side. All that didn't change. And the biggest thing that didn't change is supply and demand. I mean, we don't suddenly have more houses on the ground because of this lawsuit. It takes an incredible ground force of buyers agents to be out there and help these borrowers get into contract. That didn't, like, the war didn't change. You know, maybe the rules changed. Like, okay, we still need a lot of troops on the ground, but they're, you know, potentially could get paid less, or they may have to negotiate their pay on their behalf and disclose in a different way. And so I think, you know, like, if I were to fast forward through the end of the year and a year from now, what's happened? At worst, 30% of the existing buy-side agents won't be in the business. And, or if they are, you know, they're going to huddle up with people that are stronger. They're going to huddle up with people that can help them. And then, of course, you know, is it possible that, you know, home prices move? No. I think supply and demand, you know, if there's 5% or 4% in aggregate paid out to commissions, let's say that that's the worst case scenario, then it's just going to go into the seller's price, and they're just going to make more money on the sell side. And so I think, you know, buy side commission, yes, can potentially be disrupted. I don't think it's more than, let's say, maybe a third, you know. So and not that, and by the way, you know, I see a lot of deals where it's, you know, it's 3 and 2, or it's 2.5 and 2.5, or 2 and 2. So it's already kind of discounted down because loan amounts were so much larger. And listing agents, I will say this, they've been empowered, right? I mean, they've always been empowered, especially in a low supply market, but now they're empowered even more because, again, they're the ones that ultimately decide which offer gets accepted. So now there's one more thing to consider, is how much commission is being paid out on the other side, right? Like, you know, okay, hey, I can negotiate for you, buy side agent. I can help you together on behalf of this deal because I like your price or your offer. Or if you come in a little bit higher, you know, then I won't clip down your you know, commission. I mean, the buy side agent, which are double siding deals more than I've ever seen because they're empowered with lack of supply. I feel like, you know, they have a little bit more control. But at the end of the day, it's all about negotiation. It's all about value. And all, you know, this lawsuit really wants is disclosure. You know, the listing agent can't set what the commission is that a buyer pays for, and ultimately what the seller pays for. It all has to be negotiated. It has to be disclosed in separate little tranches. Here's my listing. Here's the agent, you know, the listing agent and seller agreement. Here's the buyer agent and buyer agreement. Now there's another agreement between those two parties, right? And so that to me is, this is more of like a big disclosure thing. And I've been saying all along, I don't think it's going to be like this massive drastic change. And I'm willing to bet that someone that thinks like, oh my gosh, it's revolutionary and everything's going to change, I guarantee you they've had their money in cash the last 2.5 years and not in the stock market, and they missed like 60% return. So don't listen to that person anyway.
All right, man. So let's not, I want to get into database strategies, but I also want to talk about another big release this week. And I actually interviewed Brian Hale. It's, by the way, everyone, make sure you follow KP on LinkedIn. He is a wealth of knowledge. Highly recommend it. Check it out. But Brian Hale brought this to my attention. I interviewed him yesterday. We'll put a link both to some of the realtors I've interviewed. We'll put those down below in the YouTube channel. But you know, this week, the NBA released the profitability numbers for Q4, and they were not great. You know, like, you know, they were actually horrible. I mean, it's a disaster. You know, and these are some of the bullet points that were part of that update. And you know, it's a significant loss, one. And two, when you really look at the loss compared to the losses back in 2008, you know, is interesting in the update. They're like takeaways. This is where we're at. And this is what it looks like compared to 2008. Expenses, you know, this is where we're at. This is what it looked like in 2008. I mean, it's rough. So, and I do think making your database a priority, you know, I've been lobbying this for a long time. The loan officer that makes their database their number one priority, first of all, they have more leverage to recruit realtors and they have more loans. They have more loans now. And the lender that makes their database their number one priority, I believe could be profitable today. You know, like if you really had great database practices and you had great adoption of those database practices by your sales force, like you could be profitable in bad weather like today. Obviously, when it gets easy, everybody's going to be profitable in good weather. But remember, guys, we're in mortgage. We got good weather ahead. And even when we get on the other side of that, we're going to have bad weather coming at some point, you know? So guys, any thoughts, any takeaways to this MBA data? Let's go first with you.
Kevin, you want to go first? Oh,
yeah.
okay. Well, go ahead, Kevin. You go.
Owen is, by the way, Owen is super tied into the MBA. I mean, he is, you know, chair of MORPAC, and you know, he helps raise money for that political action committee, and they are the premier lobby group for the industry. So, you know, anything MBA, Owen, you know, I know you worked your butt off for that, and obviously good to see you last week at the MBA Midwinter.
And real quick, guys, give him a reaction, give him an applause. I mean, the man is donating a lot of time and money. No, it's no joke, man. Thank you for the service that you give. It's pretty crazy. And by the way, look at all the reactions you're getting. You're getting some little standing ovation on Zoom. There you go.
I need to record that, show it to my wife, and tell her I need more appreciation.
Hey, they're wired to make sure that we're always giving. So, yeah, that's right. I'll give it to you. But you know, I will tell you that you know, this data is. I mean, I don't think it's a surprise. You know, I'm going to say something, and I don't want to sound, you know, unpopular, but the reality is, like, out of that $13,000 of cost in a loan, you know, 3,000 of it is the cost to produce, and the other 10 is the originator. And so, which they're worth it. I mean, they're the ones hunting the deal, right? So a lot of that is commission, and that number is going to get bigger because loan amounts are bigger. Now, whether it's a loss or a profit, that just depends on each lender, each independent mortgage banker. Now, I'm, you know, Owen and I are both, you know, owners of an independent mortgage banker. And so I would say that, you know, unlike maybe some of these equity firm or hedge fund backed companies, which, by the way, a lot of them got shut down the last 2 years, okay? Because those guys are heartless, not the people that run it, the people with the money. Mm-hmm. Owen and I are the ones with the money, and we have a heart. And honestly, like, if we did with the equity firm playbook in July of 22, we could have fired 50% of our staff overnight, paid all the warrant claims, and we'd still be here with probably 10, 15, 20 more $1 million in our pocket. But it isn't just about money. It's about, this is our family. This is our teammate. The market's going to turn. When it turns, we want to turn with it. We want our people who we've been with, who've been loyal to us, who are good, who are performing at a high level, to be part of our team. So we can turn on a dime and turn with it. And so that's a lot of what you're seeing right there. A lot of owners of independent mortgage bankers have a big, huge freaking heart. And I'm going to heart that reaction right now, because that's where that cost comes from. Okay. We kept people on staff, and it cost us a ton of. I want to say it isn't just about money. You know, it's about being ready to turn when the market turns. And then the market's turning. And the market has turned, and everyone's locks are up, and everyone's pipelines are up. Everyone's busy. And so this business is a capacity model. $4.6 trillion. All these people are in there, realtors, loan officers, ops staff, get everything done. Now we're down to what, 1.7 trillion last year, right? So we've come down. So now that business is picking up, rates are a full point or more lower than they were just a couple months ago. It's spring purchase season. The Fed is going to cut sometime this year. Now, when the business grows, the capacity is right here. It's going to feel busy. And that's when profitability comes back. So profitability comes back, margins go up, there's more supply of loans. There's more, demand for loans than our supply to get it through the system. So that number will change. Always has. It's a very cyclical chart. You could take that chart that you showed and go all the way back, and it's like this forever, and it never stops. And that's just how it is until someone comes in and takes the humans out of the borrower side of it. And you're not going to. They need us. They need our database. They need to be our relationship advice. They need us to help them. You can't automate what we do on the origination side. You cannot automate an originator. You look at the call centers, they don't do well in a hard, tough, grinded out purchase market like we had for the last 2 years. They do well in easy peasy refinance times, which we're not in right now. Originators are needed right now because they get the job done and they're part of that local force that helps build the communities. And that's not going away. So that chart's going to go back up.
All right.
Yep.
Owen, what do you have to either add to that or augment to that?
The only thing I would say, and I 100% on board with what Kevin says, this is a people business. There's no doubt about it. The only thing that concerns me about that number a little bit is, man, that's a steep climb. And, right, it's almost a doubling from the, the third quarter to the fourth quarter. Obviously, we got a bump in interest rates whenever the hell it was, late September, early October last year. I think it caught a few people off guard because that was also right around the time that the Federal Reserve stopped raising interest rates. And, my only concern is, we're coming up on 8 quarters in a row of a loss. And I believe in everything that Kevin said about this being a people business. We just, especially as IMBs, we got to keep our eye on the ball because I don't want, we've all heard the stories of the different companies. I'm not going to say their names, that go out of business kind of suddenly. And we just got to make sure that we're loyal to the people that we have, but we're also keeping our eye on the ball because I believe what Kevin said. I believe what he said about the direction of the marketplace. Sometimes we just get hiccups along the way, and I'm concerned if we have another hiccup that it's going to take out a few more people, and I don't want that to happen, right? I believe we're in the Pacific Ocean of opportunity in the mortgage business. I don't celebrate. I mourn when somebody goes under. And, I just want to make sure we're all collectively keeping our eye on the ball.
All right. So I'm going to pivot the call. I think we did a great job of just kind of sharing our vision and our perspective on some of the real big problems in the industry. But I truly believe like we can't control the uncontrollables, which are interest rates, but we can control the controllables and what our database practices are, the type of technology that we, implement into our tech stack, we can control that. The type of leadership we bring to actually be successful with, the borrower intelligence platform, our platform, your CRM, MortgageCoach, whatever the technology that actually improves the productivity of your loan officers and stops you from losing loans. Like you can control deploying that and you can control how successful you are with that. And I asked these two gentlemen is because they're both doing a great job. That, how they have resourced their database, the technologies that they're implementing and the practices they're implementing, they're leaders. They're top of the food chain. So let's transition into strategies for your database. Like, what are you doing? What are your top strategies for optimizing your database? And KP, I'm going to start with you on this. When I asked that question, just like I asked it, what are your top strategies to optimize your database? What comes to mind? And then Owen will come to you with the same question.
Yeah, I may start off sounding a little basic, but obviously, there's farming and there's hunting, right? Tend to your existing database, right? And work through that. Have a system of how you work through that. Follow-up calls, monthly calls, quarterly. God forbid you don't even do that. Okay, yearly, but you got to call. I mean, every client that's ever funded a loan with you, you should never lose that client. Like period, full stop, right? There's just no reason, at least not lose contact with them, right? So there's that. Then there's growing your database, right? And so how do you do that? So hunting and farming are obviously two different things. We've been, huge clients and partners with Trust Engine of both entities that came together, both Sales Boomerang and MortgageCoach. Sales Boomerang, 600,000, 700,000 records flown through the system from us to them. And, it's just great insights, having that intelligence to get in there. And, here's an opportunity to call that we didn't know about because Trust Engine had our back. And so that's farming, right? Hunting. Okay. How do you get new business? I think social selling is huge, right? So whether it's Social Coach or some other kind of thing out there that you use, you've got to find a way to be on social media, even if you're just doing basic communication, because that's all social selling is. It's just communication at scale. So how do you grow the database? You can't just rely on realtors. You can't just rely on who you bump into and run to. How are you growing the names? Some people buy leads, right? I mean, that's a way to do it as well. So, and then once you have, you're growing that database, what are you talking to them about? How do you nurture them? How do you, if someone's not ready, do you have something set up that's automated to repair and restore their credit? Do you have the ability, we use Credible, right? So, what are some things that you do, what you talk about? What are your talking points with them when you're getting new people on the loan? And then, of course, once you get to the point where you're talking brass tacks and you're getting into it, the TCA is the best thing out there. And the total cost analysis, hands down, is the absolute best way to communicate to a borrower, at that moment when you're getting into all the nitty gritty. And it's just, it just makes you stand apart. Now, that is a style of communicating. That is a way that I'm going to talk about things like fees and costs and options of the loans and interest rates and the programs and all the different things that you want to do. It gives you a stylized way in a very succinct, repeatable way to talk with your database and grow your database and with that consumer. And then, of course, all of it has your touch on it. So it is still a people business, as Owen said. So the way you do all these things, it all revolves around the originator. Every single bit of it. It's their messaging, it's their face, it's their experience, it's their reputation. It's the way they put themselves out on social media or not. It's how they talk about fees with the TCA. It's how they know when to call when they get an alert from the Trust Engine insights and whatnot. So all of that is hard as leaders to train hundreds of loan officers to be good at. And so when you get into this market, one reason why these consumer direct companies that are really large do well in markets is because they literally you come in, you clock in, you take 50 phone calls or you're fired. And I need you to do this, 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 and this. And then I've got people hovering over you and managing you and looking at the metrics. Originators aren't micromanaged like that. So there's a lot of trust that we place in our originators to do all these things that we try and guide them and lead them. And the irony here is that if we don't micromanage and we don't lead them and we don't help them with these things and they do poorly, a lot of times they go, hey, my immediate leadership is failing me, even though they don't necessarily want to be completely micromanaged. And so, it's a tough position that Owen and I are in, with our teams, is to try and guide people and give them the leadership without being overbearing, even though sometimes that approach works pretty damn well in certain markets.
Owen?
Well, I believe, in a lot of those things, and just to kind of add to it, when you talk about, what's your top strategies for your database, I think a couple things. One of the things that Kevin just said that I love, I wrote it down. You can't just rely on realtors anymore, right? We are empowered with the technology that we have, with the database that we have. Do we want realtors? Yes, we want realtors. I'm the CEO of an independent mortgage bank like Kevin. We get his company's a lot larger than mine, but we get a lot of our work from distributed retail loan officers, right? These are pound the pavement, press the flesh, old-fashioned belly-to-belly, face-to-face sales. And I love that. But we now also have these additional tools, right, that you cannot ignore. We've got technology that you cannot ignore. We've got data that you cannot ignore. And we have it within our power to squeeze more juice out of that lemon. And I think one of the things that we're really trying to do here, we did a couple of fun things last year that we're looking at doing again this year, is there's always been this conundrum, right? We know that legally that data belongs to the company. We know that morally and in people's mind that data is owned by the loan officer. And I'm a big believer in the fact that two things can be true at the same time, right? It's not one or the other. It can be both instead of or. And that data is becoming more and more valuable, right? And so, you know, these marketing tools that we have, these marketing tools that are inside of Trust Engine with the borrower creatives and that are putting out, listen, this is 7 light years away from sending out the turkey recipe 3 days after Thanksgiving. And we have to take advantage of that. And that data is becoming more and more valuable. So we have to work with our distributed retail loan officers using and adopting tools to make sure that they are adopting these. Because I'm a strong believer in the fact that, hey, if you don't adopt technology, if you don't adopt, whether it's MortgageCoach, Trust Engine, or some of the other tools we all have, you know, 2-3 years from now, those deals are going to get picked up. It's almost like there's a great fisherman upstream and he's pulling 40% of the fish out of the river before they even get downstream, right? That's what the loan business is going to be like. If we're just doing distributed retail, trying to get deals from loan officers, you're going to work 30% harder to get 40% less deals because they're going to be picked off up the stream. And we have to be in partnership with our loan officers to say, hey, you can no longer ignore this, and talk to them about it. And I think a lot of us, myself included, used to kind of run away from that conversation, right? Because we knew legally the data belonged to us. We knew that from their point of view and on many levels morally, that data belonged to them, right? You know, and we got to work in partnership with them to recognize the gold that's there. Because if we ignore it at our own peril. And boy, the opportunity cost, you know, I believe you might as well be driving down the road. My office building in Plymouth, Michigan is on this road called Sheldon Road. I might as well drive up and down Sheldon Road, throw $50 bills out the window if I'm not going to try and pay attention to my database.
All right, everyone. I hope you're getting value from this conversation. And I know that I truly believe lenders do not need to be unprofitable in this market. If they were truly stopping the loss of loans, not only from your database, but at conversion, and if you were truly reducing concessions at scale in your organization, you'd be profitable today. Like there's enough data and enough opportunities in your database to be profitable. So we're going to have 5 loss loan reports. This is something that's pretty expensive for us to do. It takes quite a bit of internal resources. We can only do 5 of them, but hey, you have to have a database of 150,000 or larger, and we need to be talking to someone that's a decision maker. But if you're that person and you want to be one of the 5 that we do this loss loan report at no cost as part of our sales process with you, sign up and we'll walk you through what a borrower intelligence platform is. And we'll run this loss loan report in advance of the meeting so that when we're giving you the demo, we're sharing the results. At Trust Engine, we call optimizing the funnel. And, you know, realtor referrals are always, you know, for distributed retail, call it the alpha source. And you got realtors coming in your database. You have referrals from these realtors coming into your database. You have a client database. KP mentioned social media. I actually interviewed the founder of Social Coach yesterday, and it will be on our YouTube channel any day now. It was how to use social media in this, you know, NAR settlement era. You know, you're buying leads and they're coming into a funnel. But here's the deal, guys. The industry is losing. You know, in some cases, you're losing more loans than you're closing. Actually, most cases, you're losing more loans than you're closing in the upper part of the funnel. And you're losing loans in the lower part of the funnel. You know, one of the things that we do and all of our customers do is like, how many loans am I losing? I mean, we've got a loss loan report that as you know, both of these gentlemen are our borrower intelligence clients. They're using our borrower intelligence platform, you know, where we're going to be letting you know how many loans you're losing on a monthly basis. And if you're a lender and you're not tracking that, you need to be tracking it. At the end of the webinar, I'm going to tell anyone who wants to go through our sales process, even if we don't have your database, we have an ability to look at your lost loan report from a refi standpoint and look at it over the past 3-4 years, and not only telling you how many loans you're losing, but who you're losing them to. So just know, guys, like, you want to optimize your database, what this is all about. You got to measure what you're losing. And then if
Hey,
you
Dave,
want to,
Dave,
yeah, go ahead.
I don't mean to interrupt you. Can you throw up that? This is the reality right here, right? You talk to your loan officers, they're like, what are you talking about? All my clients come back to me, right? That's not what the data says. And if you become curious about that, what that data is, you will be shocked. You'll be shocked. And I would encourage you to, look at it and have the courage to look at it and have the courage to judge yourself on what that data is. I know Trust Engine has a great tool for that, but everybody thinks all your borrowers come back. They don't.
Yeah, and we'll make that clear for you. I mean, that is part of, whether you're a customer of ours, that's part of the reporting we provide. And if you're a prospect, we'll bring you some visibility there. And then you want to optimize your database. You need to make sure you're optimizing the conversion, from the time that we touched them and the disclosure engine started, and we ran a credit report, which is more expensive than ever. And you know what else is more expensive than ever? Concessions, price concessions. How do you minimize these concessions? This is a anonymized case study of a real IMB that was losing 45 basis points to withdrawn loans, and they were losing 40 basis points concessions. By the way, if they could have just cut that in half, they would have been they would be profitable. They could have. I know a lot of lenders that if they could have just got an extra 10 basis points, 6 basis points, they would have been profitable. And guys, there's hundreds of basis points sitting in this funnel, and there's a lot of basis points sitting in the lower part of the funnel. And by the way, guys, this is another thing that a borrower intelligence platform does, where each one of these dots is a loan officer, and we're showing how many opportunities are in the database for that loan officer on a monthly basis. This little pink line is how many apps were created for those opportunities. And then this bottom line is how many loans were funded. And so, really the difference between the most profitable loan officers and the least profitable loan officers, it's concessions and it's conversion. Like if you took your loan officers and you said, hey, who are all of our top tier? They're profitable. And there are loan officers that are profitable right now. They're making profits per loan. You took your middle tier loan officers that you're losing a couple hundred, making a couple hundred. And then you had your third tier, the loan officers that are, losing money on every file or losing, this is a real anonymized case study of an IMB. It's real. So gentlemen, before I ask the next question, any comments on what I just went through? I mean, that was a nice ad, Owen, but any comments on any of those slides or any of those perspectives?
Well, I'll just say I like what Owen said. The genius of the "and" is how I think I read that and from good to great, right? So it's not this is our loan or it's your loan, lender versus originator. That's why you have to be very clear about what, if you disclose a loan in our system and pull a credit report, okay, then there's a tremendous amount of liability and risk with federal, state regulators on the lender's behalf. And so, that loan is started and in process. Anything other than that, the database, that belongs to the originator, period, full stop, for us. And that's despite all the tremendous support and marketing and training and everything we do to help grow the database. So again, independent mortgage bankers have a heart. We're helping grow databases for originators with their time, spent with us, even if they ultimately leave us and go take that database elsewhere. So I agree that, that it's very important. I will say that, probably the biggest factor for some of these negative stats is how tough the environment was the last year and a half, 2 years really, from this point going forward. Rates were going up. There were less borrowers. It was getting unaffordable for many to get into a house. Price became a little more important because there were less loans out there to chase, right? And so as rates have trended down and continue to trend down and will continue to trend down, there's more demand, more consumers. It's less about rate. It's more about the service. It's more about how can you even get this person under contract. You know, like I have this relationship with all these local people on the real estate side. I'm going to get you under contract, and that's worth it. And my time is worth it. And so let me show you how it's worth it. And let me use my expertise. Let me show you the TCA. So that time has come back as business goes up. Price is obviously less of a factor. It's never not a factor. You know, if it's someone's third refinance in their life, they may not even like you. They only like the price. So it's what it is, right? So especially with loan amounts getting larger and larger than ever before. But if that's your value proposition, you know, go work at a bank or credit union. You know, that's, I always do this. I love doing this joke. You know, I spoke at AIM Fuse, the first one many years ago. I had a room of a few thousand people. I go, okay, you guys talk about price a lot. One of you in here has the best price. Please raise your hand. Is there anyone here that works at Navy Federal Credit Union or something like that, right? Give the vets a little hat tip. Okay, that person right there has a better price than all of you. Please give all of your loans to that person, okay? We done talking about price? All right, we're done, right? Because there's always someone better. There's always someone better, and that cannot be the value proposition. So again, I think, you know, the cream rises to the top in our business. Local leadership absolutely matters. The support from the enterprise, the mothership, the lender that helps enable that local leader and originator be better, grow their database, mine their database, farm, hunt, grow. Like, to me, that is what matters in this business. And finally, the market is being more favorable for all of us here. Congratulations, you got through one of the worst times I've seen since 2001, if not the worst, just because it was such a slow burn.
Yeah, no doubt. Well, let's throw in the next question. So this is going to be the next question, gentlemen. And Owen, if you do want to add anything to the last slides, go for it. But, you know, what are the most important segments in a database? Because usually when I ask someone about their database, they just immediately think my past customers or my servicing portfolio, you know, like, and historically speaking, you know, C-suite, you know, like running sales boomerang and trigger alerts and, you know, all the different alerts, it's expensive. You know, there's a cost for the database monitoring, there's a cost for the alerts, but there's a lot of other segments. You know, rate and term refis are coming. It's not a question of if, it's when, how fast. There's a prospect database, and we find it at Trust Engine with our buyer intelligence platform that often that prospect database is generating more loans and more opportunities than this database. And then of course there's orphans. You know, there's clients, you know, lenders that have left the business. You know, tens of thousands of loan officers have left the business, and so there's orphans. And so, guys, first of all, are there some other segments that you want to call out? And then two, I'm going to go through and ask you guys to kind of prioritize these and talk about these. So I'm going to start with you, Owen. First of all, are there any other segments you want to call out besides the one I showed there?
No, I don't think so. I mean, but I do have a strong belief that there are two kinds of orphan loans, right? And they're the kind of orphan loans, like generally speaking, inside of our company, we would think of as orphan loans as people that we have prospected to or closed a loan for in the past, where the loan officer no longer works here or the loan officer is no longer in the business. Because let's face it, most of the last 2 years, it's been the loan officer's no longer in the business. So those are orphan loans. I would submit to you, you know, everybody on this call is probably some kind of C-suite, management, director, decision maker inside of your company, thought leader, whatever. I would submit to you that there's a second category of orphan loans. And that second category of orphan loans is the prospects and past clients of loan officers who don't pay attention to their database and who are not yet convinced that there's gold inside of mining that. And, you know, as we talked about earlier, as Kevin said, you can't just rely on the realtor anymore, right? You got to add to that database. And one of the things that the past 2 years has taught me, I've been doing this since 2002. And one of the things that I've learned that's crystallized for me even more is that you have to run to that difficult conversation, right? You can't run away from it. It's more important than ever when you've got 7 quarters in a row of losses that you have those difficult conversations. And one of those conversations is with your loan officers who are not paying attention to their own database, that second category of orphan loans, if you will. Have that conversation. Talk to them about it. Ask them why they're not interested in doing it. Ask them to change their habits. If they don't want to change their habits, have a conversation with them about you taking that over and paying them a portion of every time you get a closed loan out of there. Put somebody on that, because it's not just the orphan loans of the people that have left the industry or the people that might have left your company. I would argue that the people who are in the database of a loan officer who's not paying attention to their database are equally as orphaned and equally as valuable, if not more valuable, to your company. So run to that conversation. Don't run away from it. You'll be better off for it, and the loan officer that's working with you will be better off for it as well.
That's such a good point. And I love how you delineated two categories of orphans. And it's something, you know, we actually just released a blog post and we put a link to that in chat. And we also have created some content. We've actually created an orphan calculator. So, you know, you go online, put in the size of your orphan calculator, because we're just finding so many lenders that have contacts that aren't being managed, that are worth like hundreds of loans. Like it is the difference between profitability and not profitability. KP, what do you want to comment there in terms of what Owen just said in data segments?
Well, if you manage your orphan loans, the sun will come out tomorrow. So, you know, I'm pretty sure that, you know, it'll be a better. You know, we got 4 little kids in the house, and we watch Annie. I'm not kidding. I think we just watched Annie this past weekend. Our kids
by the way, I had young kids, and I've watched Annie a couple hundred times, so I know what that's like.
Well, it probably the movie came out on VCR when they were young. Mine are, you know, TK, first, third, and fifth graders, and we're still watching Annie in our house. Yeah. We're old school here. But yeah, I will tell you that I have this saying. I have a whole list of KP's principles. I'm not going to get all that, but one of them is perfection is unattainable, yet always the goal. So think about that. Like, you see these stats, like this percent of that and this, but like, of course it's 100%. Like every bar I've ever talked to in my entire career, I'm going to do their loan, right? That's the goal. Okay. So if you take that mindset, what are you not doing to make that happen? You know, you can't just be like, oh, well, they rate shot me, so there's no way, or you know, well, they weren't ready when I talked to them. Okay, well, they're going to be ready at some point, right? And so what systematic approach do you have? And I got to tell you what, like, it's actually really hard for originators to do this, because a lot of reason why we have independent mortgage bankers, distributed retail, originators that work out of their home, it's because, you know, when shit hits the fan and 4 kids come home, hey, I got to get ready and get them all the soccer practice and karate and Kumon and swimming and junior guards and flag football and all this stuff. You can't just sit there chained to a desk and have this database presented to you and you're just systematically making phone calls. That's perfection, right? I'm not saying that's the perfect service, but that's the perfect way to actually manage and grow your database. I call every single time when it's 1 week from closing. How was my closing? Please fill this out. And then follow up and make sure they fill out the survey, right? I call every time exactly 1 month on the anniversary when they funded. And I just say, hey, you know, let me talk to you about what's popular right now, home equity. Have you thought about what you're going to do with your equity? Do you do that with every single bar? Do you put exactly this many social posts and post them and put out videos and grow your database? I mean, that's how systematic the top tier competition is. And I guarantee you, and we're all guilty of it. It's hard to manage our time and manage the ability to catch all these orphan loans and make them all, you know, give them a loving home, be their parent, you know, make that sun come out tomorrow. So for me, I think it's the hardest thing for originators and lenders who support originators to do, is to get them to have these perfected systems to manage their loans and their database and have less orphans out there. It's very incredibly difficult, but you got to try. And it takes, I mean, I'm on the phone all day. Like, I am on the phone all day, every day. And as you grow your database and you have more and more people you've touched over your years of your career, think of how many more calls you have to make. Now you need an LOA. Now you need an assistant. Now maybe you want to outsource the dialing. You know, you can't just send out an email like, I touched base. They want to hear you. They want to hear your voice. They want to know, you know, you and how you help them or can help them. And the more you talk to them, the more attention you give them, the more they want to give back to you.
Yeah, no, so good, guys, man. I love this conversation. I definitely brought in
You know,
the right two
Dave,
leaders on this.
I
Go
just
ahead. Go
gotta
ahead.
I just gotta say one thing. It's just brilliant. If you manage your orphan loans, the sun will come out tomorrow. I saw those reactions come up on the side of the screen, and I thought, dag nabbit, Kevin, I've been on panels with you before. You always get more laughs than I do, and it's true. It's 100% true. So,
Well, he gets more laughs than all of
boy,
us.
I'm foiled
Yeah.
again. Foiled again.
You
Yeah,
gotta you gotta
no,
have fun in this
no.
business. I mean, this business is
That's
stressful.
right. That's right.
It's stressful. Literally looking in the mirror and knowing I didn't make all my calls today. Like I failed today. Like I just my fifth grader fell off the swing and she hit her head and we had to take her out of school and take her to the doctor. I didn't get 50 calls in today. Like that's the kind of stuff that happens. And so you also have to kind of take a long approach, with where you work and the support and what you do and the types of market we go through. It's just hard, right? And so and that actually happened. Kayla,
it's a hard knock life.
It is a hard knock life.
All right, guys. I got a couple more questions. I do want to really push everyone to dollarize this. We've got this calculator. There's a link down below. Put in the size of your orphan database. I put in 150,000 just to round it out. Guys, what would be a good average loan amount? What should I put in here for average loan amount?
Just put 350.
I mean, our company's, yeah, I think that's good. Our company's a little bit smaller. We're about 310 because we're not big in California or New York, but 350, 400, I think would be great.
And then put in your pull-through rate, from application to funding. And guys, this is the type, the higher your conversion is, look at the monthly volume, look at the yearly volume. I mean, it's just, by the way, this is one data segment that is laundry money for most lenders. So, use this tool. And if you want to talk to us, click here. And then remember, I'll talk about it as I close this call. If you want to, learn more about our platform, I mean, part of the sales process, again, you need to be a qualified, prospect for a borrower intelligence platform. Our borrower intelligence platform, you need at least 150,000 records to turn that into loans. Hey, real quick, KP, because I do want to, I already got a quote from Owen on why, what he loves about the borrower intelligence platform. But why did you and, PRMG decide to become a borrower intelligence client? It'd be good to know that.
Well, we've been a sales boomerang client for, gosh, I think I set that contract up with Alex Consistent maybe 6 years ago at this point, maybe at least 5.5. And so, for me, it was seeing the evolution of the technology, right? So it went from single bureau credit mover data, which is a very specific credit set, right? Which at the time, I was talking to one of the bureaus specifically to do that. But then you guys evolved into all three bureaus. So now you kept the price pretty reasonable. So I didn't have to have a relationship with all three of the bureaus directly and deal with that compliance nightmare. And so I was working with you guys. Then it just kept evolving. It kept getting better. Then you guys came together as a company. So now I can take the TCA in combination with the sales boomerang triggers. So now you've got Trust Engine. Then it turned into the borrower insights, which are different sets of data you guys are looking at with even different and more palpable, opportunities to call. So you guys just continue to evolve as a company. And so for me, when I'm evaluating tech partners and who we want to work with, and to see an evolution, to see two great companies come together and then make that work, and then get better after they've come together. And it wasn't like a shit show or nightmare when you guys came together. To me, it was just just to see the company get better and better every day. That is for me that's very important. I'm tip of the spear for my company, hunting down fintech partners and what's next and what's around the corner and blind spots and trying to make our company more modern and all that kind of stuff. So you guys, you pass all, and by the way, I mean, we put you guys up against some competitors when it comes to, customer intelligence, and your borrower insights were really good. And so you won. And so you guys also compete like we have to every day. No one gives us loans, right? Like we have to fight every single day. And so you don't always win. You're not always perfect, but you guys are grinding it. You guys are mortgage people. That to me was a lot of the thought and reason why we just keep evolving our relationship together with Trust Engine.
Well, I appreciate the partnership, brother. And Owen, how, what was some of your why as to why I mean, you really went all in to be as, to pull as many signals and to pull as many loans out of your database. What was your why?
Well, I just have a belief system that if you don't hop on board with technology, you're going to be left behind. And you're not going to, look, loan officers, I agree with Kevin 100%, that human touch, we're not going to become travel agents. Your loans aren't going to go to some AI talking, headphone on kind of avatar, right? But they are going to get picked off by people who are fishing further upstream. So you can either go upstream and fish there where there are more fish, or you can, try and get better worms or a better lure or something. I don't really know. I know with Trust Engine that we're closing loans that we wouldn't otherwise close and that we wouldn't otherwise find. And they would become part of that slide that you showed earlier where, well, whatever it was, 12.7% of your clients are retained. I think we have it in ourselves to be better than that. And Trust Engine is helping us do that.
I love that. Hey, one more question on that, and then we'll close out with a couple more strategies. But, Owen, thank you very much for this amazing quote, where you kind of also answered the why. It's amazing. We're getting loans that we would have otherwise missed in the past. I think one of the things, and I know this because
what a handsome young man. What a handsome, looks like your son. He looks like your son.
Yeah, I'm going to keep using that photo. Another 4 or 5 years, and people accuse me of being a realtor. I don't know.
No. The phrase is catfishing. So
yeah, there you go. Are you saying Owen's catfishing here on public?
Actually, I was just with him last week. He still looks pretty good.
All right, man. So I think one of the things that holds back, especially with distributed retail, from really like, hey, I want to optimize my database, is one, they give the loan officers too much power, and the loan officers think that they're getting more of their data than they are. And then two, they're kind of worried that, oh, I would have got that loan either way. Like I don't need that data intelligence, or I don't need to go all in because it's not incremental enough. And any comments or thoughts on that, Owen?
I just think that again, you cannot underestimate how how much we all need this technology. And I don't think we would have gotten these loans earlier. I remember the first time that Boomerang showed me a list of loans that we did or that we missed, and I parceled it out and I sent it to every loan officer. And that was really eye-opening. It was painful, but we learned a lot. And so I just think that, you have to have the data. You have to have the conversations about the data, which are sometimes tough. And you have to be willing and open-minded of how to get better, even if looking at that picture is not something that you want to do.
I like that picture. All right. So last segments, because it's coming soon. And by the way, I do want to call out to everyone just to open the thoughts. I mean, a borrower intelligence platform, and if you're really using data, you're not just predicting, oh, someone ran a credit report and they're cheating on me. You're identifying people in the funnel that haven't shown up yet, and so one of the biggest, call it future opportunities, that's either you're going to lose loans at record pace if you're not armed, or you're going to, as rates come down, you're going to win. We're helping our lenders not only measure who's most likely to refinance, but this is a big opportunity. KP, how big of an opportunity is that for the industry? And I mean, I already know how you're prepared because you've got borrower intelligence platform, but what thoughts do you have around that segment and that strategy?
Well, home equity strategy is huge. So home equity strategy is a big deal right now. So having good good tappable equity programs really helps borrowers, because there's going to be some borrowers that don't want to lose that first lien rate they got, back when rates were at their trough. Building non-QM business is super important, because that always leads to another refinance. I mean, nobody wants those higher rates. So those are your highest rates in the market right now. And those in the past were typically your orphaned borrowers. And I'll tell you, like, being a knowledgeable originator at non-QM takes some time. Like, you have to understand there's so many little niches. We call them non-QM nuggets, right? And so there's just so many little niches in there. And those higher rates become a refinance later. Now, I'll also say, just generally, the Fed just said yesterday, again, they're going to cut 75 basis points this year. They're going to cut, about 3 times of 25, if you say it. Maybe they just do 150 and then wait. I don't know what their strategy is, when they're going to start. I've been placing the bet of May for a year now, and looking like it might be, June or July. So maybe I'm 6 or 12 weeks off. But, they keep saying they want to get rates down this year. And so loan amounts are the largest they've ever been. And so the net tangible, but it used to be like, oh, if I could save you a point on your interest rate, we'll do the refinance. Now it's like half a point. If you're a jumbo loan in a big, market, half a point is meaningful in the monthly payment. So you've got about, whenever the Fed starts cutting the rates, you're going to have about 2 years of first-time home buyer business at these higher interest rates than the rates that will be after the Fed starts cutting. 1.5 trillion a year, so $3 trillion in first-time home buyers for 2 years. They're now eligible for refinance, and that opportunity is insane. So if you don't have these systems in place with Trust Engine now to start getting alerts fired to you when that opportunity comes, it'll be hard to manage, because then the demand will be overwhelming and your time will be even more crunched. And we'll be back to 12, 15-hour, phone days. Like, I just can't talk to enough people, because it's like, loans are falling out of the sky again. And that will happen. I think there'll be and the reason why it'll feel like that is because about 50% of the originators in the business are gone. And so there's just a lot less people to take the phone calls. There's a lot less competition from the lender side. So, we've shed a lot of capacities, a lot of people have left, and the demand will go up. And it'll feel like it's doubled, even though the business isn't actually doubling. But because the capacity is down, it will feel crushing. We're slammed right now. Like, we are slammed right now in registration setup, underwriting, closing funding, and month end for sure. So we're already staffing into it. We're leaning into it. So setting up these systems now before the Fed cuts the rate on the refinance side is super, super critical. You're running out of time.
And so here's some closing thoughts. First of all, if you're not measuring this and having it in an actionable way, you're not as prepared as these two gentlemen and everyone that's got a borrower intelligence platform. I mean, you've got to be able to identify in any database about 1 to 1.25% of your database is in the money. Like, they're looking to buy, sell, or refinance. And one of the things that we're doing, and I want to get closing thoughts for both of you on this, is, first of all, one of the biggest challenges is loan officers aren't using their CRMs. They're not logging in. We're part of a borrower intelligence platform is like, we're going to email that consumer, data-driven. We're going to deliver a total cost analysis, data-driven, automation. And then, guys, this is the second time I've shown this in public. Both of you guys are going to have this. I'm not going to say the date, but, next month sometime, where there'll be an app. And, right here on that app, it's going to show who are the 1% of the loans in the database for that loan officer that are most in the money. And it's going to, if the consumer clicked on that email, like if the consumer clicked and engaged, it's going to go to the top. Hey, they opened it. And then when they click on this, it's going to show the information on that consumer. And it's going to help them have a better conversation. They can email, text, call. So super easy to take action. And then it's got scripts. It has talking points, what to say when you call, what to say when you text, what to email. So it's your database. It's getting to the right place at the right time. And then it's exactly what to say. What do you guys think? How do you like that?
I love it.
I love it. I love it. When we first started to, it reminds me when we, just when we were talking about this, one of the things that we did with our conversation we wrote a piece of software inside of our company where we turned the alerts into a text message. And so the boomerang lead would come in, the trust engine lead would come in, it would go directly to the loan officer's phone, and they would get a couple snippets of information, and then they would just have to press one number to make a phone call. And I was on the phone with my loan officers, and I said, guys, all we need to do is move our thumb an inch. I mean, if you can't navigate that, wake up in the morning while you're drinking your first cup of coffee, maybe don't log into Facebook, maybe don't log into X or Twitter or whatever you want to call it, and just spend your time moving your thumb to go through and market to your database. Boy, oh boy, we're lowering the bar of how hard it is to do it and increasing the reward. And I think it's great stuff.
Yeah. Go ahead.
Go ahead. No, go ahead.
No, you go ahead. No, you.
Well, I just gonna say, like, I love the screenshot. I can't wait to get our hands on the app. As an Android user, full disclosure, yes, I'm that guy, because I will not be assimilated by Apple, but I can't wait for the Android version to be out.
Dude, wait a minute. We got it. We got
let's
you.
Go.
I'll show
let's
you
go.
in person in a couple, maybe next week or the following week. I'll drive out to Corona.
Way, our own Department of Justice seems to think there's a problem too, man. So they just sued Apple today. But opportunity to buy Apple stock.
Kevin, is your Android more sophisticated than my BlackBerry?
Oh, dude,
come on, guys.
It's hard. It's hard to beat the thumb keyboard. But talking to text is the way to go. I'll just say the other little screenshot, the next thing, and it's always the next thing. Like, when I looked at that, you go, man, look how easy it is to automate, prioritizing who to call in a database. It even has a script of what to say. The very next thing is the phone call. And that's always where the rubber meets the road. Whether it's an email, a text, a script, an alert, this, or that, the other, it's the phone call. And it's your phone call. It's your voice specifically as the originator. You're the one that then has to make that call. And what goes on at that point? And so you could outsource it to an LOA. You could outsource it to a call service. But if a phone call is not made, there will be a competitor that makes a phone call. And that's where it becomes an orphan. So you want a Hard Knock Life? Don't make the phone calls, and don't sleep on the Jay-Z version of Hard Knock Life. It's pretty damn good.
I love that. I love that. So here's the wrap up, guys.
Hey,
first of all, I interviewed Carl White, who I believe is he your kind of top regional, Carl, Owen?
He is, and he's a very dear friend of mine.
And so I just interviewed him literally 7 days ago, turning your database into Loans Now. So first of all, that's free. We'll put a link down below. If you want to get this prospect loan database, we don't need your data. You do need to have 150,000 records or more, and we do need to be talking to the right people on your team. So there will be some qualifications. This costs us a lot of money to do. It takes us a lot of time. But if you want to know how many loans you're losing, request a demo. You could do that on our website. It's just right here. We'll put links down below. If this is on YouTube, there'll be links to watch it. We really want to help the industry. I've been doing this for 38 years. I've been an operator. I've been a loan officer. I've been a technology entrepreneur now for a long time. And I believe in all my heart that, like, IMBs in this industry, you can be profitable in good weather when rates are down, and in bad weather when rates are up. We can be profitable. But one, you need to have the right tech stack. And then, guys, we need to make sure we prioritize it to help loan officers use that tech stack. And one of the things that we're doing that we're super pumped about, we think this is going to be a game changer, is the combination of automated messages. So we don't have to, like, is the loan officer going to call? I mean, guys, we're going to send the right message at the right time. And then we're going to give them, an app that's addictive, that they, all they got to do is log in one time, and it will alert them to their top 1%. It will tell them exactly what to say, and it will make it easy to take action on it. And by the way, Carl, this interview with Carl, he had some of the best scripting I've ever heard, on how to get your loan officers to do it. If you haven't watched this, Owen, I'll make sure I forward it to you. But I really appreciate it. Sorry,
Please,
we went
yeah.
5 minutes over, but I felt like, I don't usually do that, but I felt like it was too important. Any closing thoughts for either one of you before we let everyone go? I want to make sure you each have a closing thought if you have it.
Hey, I just, I would say I always thought I was never fully dressed without a smile, but I don't think our company's fully dressed without a technology system like this. So I appreciate the time.
Thank you. Any closing
Yeah.
thoughts, KP?
It's the sun has come out, so it's spring has sprung. It's busy. I hope everyone's ready. There is a refi wave coming, so you have some time to work on your systems right now before that wave hits. And time is precious. We're busy with purchase business. We're going to get busier with purchase business. It's going to be harder for you to take the time and set up this system. So just do it. Just do it this month. Do it this weekend. Do it now. Get ready.
Proud of that conversation. Two incredible mortgage executives sharing, what they're doing, how they're leveraging their database to generate more incremental loans now at scale. Like that is what Trust Engine is committed to. We hope that we get to meet with you and your executive team and show you how we can help you generate more incremental loans now at scale. And also make sure you're following our YouTube channel. Click the YouTube channel, sign up, and thank you very much. Hope you got value.